Now, let's get to the heart of some of those best practices that my panel has shared. I want to make sure we highlight those first. So first and foremost, y'all, I want to take you into the financial benchmarks chapter. The financial benchmarks in Vertical IQ come from the Risk Management Association. Now, not everybody that may know what they're about. The Risk Management Association partners with banks, and typically that partnership entails the risk management, RMA, doing an assessment on their commercial book. Hence, you listen to Bloomberg and they talk about so-and-so bank's concentration in CRE or hospitality, the concerns, blah, 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 right? It's coming from RMA's assessment. Why would they do that? Because RMA gets the financial statements from the loan packages. And so they are a reseller to folks like us who want vetted, accurate financials. All right, so that's what you're getting here. That's who RMA is. And this data can be filtered to align with the sales size of the business you're working with. So if you're working with a vet who is under 5 million in sales, you can make that filter choice. You can also change it to average value so that you can see the income statement and balance sheet in thousands versus just common sized by percentage. Okay, and then of course you can download this into Excel so you're helping with forecasts, or you're going to do your own analysis. It's a lot easier to do from Excel. Okay, obviously your financials really can help reveal a company's strengths and weaknesses. It can help you maximize the value for the business owner that may be looking to sell in the coming years. Now, next chapter I want to discuss is credit underwriting and risk, because we know a business owner seeking capital or looking to buy or sell a business would benefit tremendously from reviewing the credit underwriting and risk content with you. It helps understand what a bank, a financer, a credit underwriter is going to be considering when they're analyzing this deal. So this is basically set up. It's an algorithm that calculates an overall risk rating for the industry. It is based on these scores, which are on a scale of 1 to 10. Now, next to each title is a little hover bubble that is showing you what is being assessed, but basically it connects nicely to the key metrics below. So why are we seeing such a high risk flag here? Well, if you look at the business exit rate for vets, it's 12.64%. That's pretty high compared to, 10% for all industries. I usually see it about a 4% range, so lower exit rates, maybe an 8% more favorable score. When it starts creeping above, getting 2%, 3% higher, you're getting that higher risk flag. On the brighter side, we still take our animals to the vet, regardless of how the economy is doing. The performance of the industry through the last recession had positive growth. And we are expecting it to keep pace, actually outpace the national GDP, okay, the growth forecast. Now, the growth forecast here, okay, is directly from the very next chapter, the industry forecast. 5.72% is coming directly from the industry forecast chapter here. All right, you have a year-to-year projection. You have the compound annual growth rate. This comes from Inforum. Inforum uses inter-industry economics. They introduce it into their LIFT model, which is a bottom-up approach to macroeconomics. Short answer is that what they're doing is they're looking at, how industries impact one another. Think about the grocery store. I mean, there has to be 100 industries involved in a grocery store. And when we see a hiccup, stuff goes through the roof, astronomical prices for eggs, no meat available on the shelf, right? That is the inter-industry economics that they're using in their model. Now, I will tell you that underneath this specific forecast for the industry, you have macroeconomic information and metrics. Scroll down about 3/4 of the way down the page. Inforum also provides to us and to many other government agencies projections on personal consumption, unemployment, T3, T10, so forth and so on. You can read about what they do here at the bottom.